Alright traders, I'm back again with another video. In this video I want to take a little bit of time to discuss with you a little bit from my course Advanced Ichimoku Japanese Techniques. It's a little bit more focused on the three theories of Ichimoku, which are the time theory, the wave theory, and the value range observation theory. Now, a while ago I posted a video on YouTube about the value range observation theory, just a little bit, and people could not understand why I had these targets and what it was all about and what it meant. All right, so some people were really questioning that, didn't understand it. But see, what the problem is here, that in the States, most traders who trade Ichimoku only know Ichimoku for the 5 basic lines that it is. So they know the basic things about Ichimoku, the TK crossover and Kumo breakout and, you know, your 5 lines and stuff like that. They don't understand anything further than that. So I delved deeper and I looked further and I talked to many traders that know more than just that, and I've been studying it for quite a while. So I want to take a time to break it down to you a little bit, just show you what it's all about. And if you want to learn more and learn the whole concept and really how to trade Ichimoku with all 3 theories and putting it all together, you'll have to come to my site and purchase my course. But the thing about this whole thing is that the time theory, the wave theory, and the value range observation theory, they all need to be used as one, because when you use it as one, you could see the whole market, how it really works, and things. You're going to see targets and levels that you've never really knew and understood before. All right, and then I mix that in with fractals, and fractals are very important, if you ask me, much like support and resistance is also. All right, so try to remember some of the things I say on this page here, because once I leave here I'm going to the charts, and then when I say a few things you might remember. Alright, so Ichimoku, as we know, was developed by Mr. Gochi Hosada of Mayako newspaper, who is also known as Sanjin Ichimoku. Ichimoku wave theory is one of the systematic and technical theories, much like Gann and Elliott wave. The 3 major elements of Ichimoku are time theory, wave theory, and value range observation theory. Time is the most important element in the Ichimoku wave theory, not price, but time. The main component of market price is time. The price is only affected by the market. This is the basic philosophy of the time theory. Time affects the market the most, and the market is controlled by time. I know this is not what you have been taught, and probably a bit confusing to understand. So time affects the market, and there are tools to find Hinkabi, which is the day of change, the day the market turns, accelerates, and extends, and Ichimoku wave theory. All right, so that's the day of change. When we say Hinkabi, that's the day of change in the Ichimoku wave theory. The way of thinking is similar to Gann theory, because Gann also says that time is a very important element and it always balances the market. All right, so Gann and Elliott wave and Ichimoku are all kind of mixed in one and form the same kind of concepts basically. All right, therefore it determines time periods and cycles. So Ichimoku wave theory has 2 major tools to consider time periods and cycles. They are Kihan Suchi, which is the basic numerical values, and Titao Suchi, which is the equality in numerical values. All right, so from there we're going to look at a chart. I want to go through a chart, show you a couple things. I haven't even discussed much about anything really, but I'm going to show you some things, look at some wave things, and maybe you'll start to see that Ichimoku is more than just the 5 lines that you see on the chart. So let's get to the charts. Alright, so I'm starting out here with the pound yen. This is the daily time frame. So looking at this daily time frame, you can see some numbers on my charts with some lines. So you could see these numbers. So first off, let's see if you can think what some of these numbers are very important. So 9, 17, 26. What do you think about 9 and 26? Those 2 numbers are part of Ichimoku basic things, such as the 9 is your Tenkan-sen and the 26 is your Kijin-sen. 26 period Kijin-sen, 9 period Tenkan-sen. So Gochi Hosada knew that the main numbers of Ichimoku were 9, 17, and 26. They are the important numbers in Ichimoku. So when he put these numbers together, he took many years before he even put these numbers out, and he did a lot of analysis with this, and this is much like Gann also. So when you look at these numbers and look from the low and look for the next turning point, the turning point or day of change, which would be Hinka B. So go from the first candle where this low is, and you go here would be 9 periods. So as I told you, the most important numbers are 9 and 26. So when you look at that, look at this 9 periods. 1 day plus or minus the market turned on day 9. And then we get down to 17. The market turned exactly on day 17. And then 1 day plus or minus on 26. And then the market was kind of wiggly here. All right, so we're going to go and move this because I want to get to the point where we're in the current market, and we'll discuss that. But I just want you to see that these numbers, how you use these numbers. Now this is just a little bit of it, guys, so don't get confused thinking that this is it. When we put these numbers on the chart and look for days of change and look for waves, developing an N wave and understanding these wave patterns, then you'll know that at that wave you may see the change exactly. So when you look at this low here, all right, and I can show you and teach you how to use these numbers so that you can almost predict the day when the next change will occur. Okay, now we're looking at from this point to this point took 17 days. All right, and then the market changed plus or minus 1 day, plus or minus 1 day. So on 17 you had a big change right here. This was 17, 18, and the market changed plus or minus 1. All right, so now when I move this to this period right here and I go to this low, from this low to here plus or minus 1 day, 17, it looks as if the market's trying to make a change. Now I'm going to go from the high here and we're going to move forward with the current market, and I'm going to show you what I have on my chart here. So from this point you could see the market move down plus or minus 1 day, 26 periods. The market made a change. All right, and then the market moved higher on day 42. It looks as if we're going to have maybe a change in direction here, so you may get a pullback here. All right, and then the market may move higher. All right, but I'm going to show you what we're looking at and what we're shooting for totally, because you have to take the big picture. So I started with this low here. You could see this move here with this purple line, and then a purple line down, and then a purple line up. This will be a N wave, okay? And that's the main wave of Ichimoku, is that N wave, and you're going to be looking for those waves. That's going to be very important to you. All right, but now looking at a bigger picture, you could see this big wave, but inside the big wave there's smaller N waves. The market moves in these N waves. You could see these waves without me drawing it. I'm not going to spend time to draw it for you because you could basically see this, okay? You could see these waves. Let me draw it. I say I'm not going to, but I am. So the market moves down, pulls back, moves down, pulls back, and I'm not real neat with it. Moves down, pulls back, moves down. You can see these waves. These are N waves basically. This is an N wave. All right. Then you keep going. Each wave is an N wave, an N wave, an N wave. All right. The first part of the wave is an I wave, and an I wave together with another I wave is a V wave, and then you have an N wave. All right. So what we want to look at is this point here. Now, when I talked about value range observation and people were confused about the values and stuff that I was looking at, when you're looking at a 1, 2, 3 or AB equals CD concept, you're kind of using the Ichimoku wave theory, right? Because overall, when I look at this whole chart, I'm looking at this big picture, and in the long run I'm thinking the market's going to move higher to a point. Now here's how I put my values on here, and these values are already set, so I don't have to change them. I set them in the fib expansion tool. Boom, boom, and boom. So we would think that based off of Ichimoku and everything that we know, that this market is going to move and finish and reach up to this point here. All right, so in Ichimoku you have values, as we were talking about. Those values are going to be, this is your highest value. So we can have a pattern which would go much like this. So maybe the pattern goes like this. This is your N wave, as you see right here. But now this N wave can extend because we haven't passed this level here. So that N wave could extend and be at this point. This would be a 1-to-1 ratio right there, because that would be A, B equals C, D, which would mean this A and B are the same length as this C and D. Hits the 1-to-1 ratio. I already have that set in my fib tool when I put it on here. All right, so with that said, this also shows me that this is my E level, see up here, and I have it set, and then this is my V level, this is my N level, and then this line here is my NT level. I don't concern myself much with NT level. These levels are used for targets, all right, based on where you think the market's going to move to based off of the N wave and the patterns that we see in the market. All right, so when we use these levels, we would look for the market to move. So if the market, you get a pullback here, then the market moves up to this point. Well, if you get that pullback and the market moves up to that point, what's this going to be right here? This is going to be an N wave. All right, see these waves inside of waves and so forth. So I just drew a little bit to let you show, but it's complex. It gets a little deeper. Okay, so you start using your days, your time, to look for what's going on in the market. So we're at day 42. So now I'm going to show you where I'm looking for the market to go and what I'm looking at the market doing. All right, we're getting a little deeper here. All right, so let's go to the 4-hour time frame. Now when you use this observation theory and your time and price analysis, you want to use daily time frame, and then you could go down to your smaller time frame and start looking at what's going on with the charts. Let me go here. So we'll go to the 4-hour time frame, and then we said we had our target levels, and then you can see the big N wave that I have here. But inside that N wave, I have some other waves that I'm concerned with and looking at. So I'm going to make these on the 4-hour time frame. I'm going to draw this wave pattern, and then I'm going to talk about it. So we go from here to here. Then we need another line. We go from here to here. So first you had an I wave, and then another I wave makes a V wave, and then when we add another wave, now I'm going to go to the very top. It gives you an N wave. All right, right to the top. So you see the red now. The red is the 4-hour time frame. When I look at this and we talk about day 42 on the daily time frame, we were looking at day 42. Well, look at Kijinsen, flat right here. We're flat. Look at the cloud here. You got a thick cloud, which is volatility. So with price closing below this Kijinsen, I'm set to see the market pull back. All right, but that doesn't take us out of what we're looking for, because basically you're going to see the market pull back because it's going to go to a couple places. Now let's do this. Let's put this in. Put this line here. Make it a little thinner. We don't need to see it that deep. But you can see I made it off of these highs here, bouncing off of this level, and then market bouncing at this point. You could see where the market went, bounced on this point. All right, so I'm going to mark another level here. I'm going to mark a horizontal level. Just use the horizontal ray. So I'm using this top here. I'm going to go to this bottom here. So this is my zone here. This is a little zone that we have. Now, if I look at this, you could see on the daily time frame when we go back where I made this zone. For the market to pull all the way back, it would pull back to this top here, which is a fractal level, all right, which is very important. Like the market likes to pull back to those levels, so you see that fractal level, that's where the market could pull back to. That would be my final level where I would think that the market would pull back to. So let's go back to the 4-hour time frame. So now I'm looking for the market to close below this level, and you could look for a trade. If you trade the market below that level, you'd be looking for this. So this is kind of what you're going to be looking at. The market move and another wave. You could see the market drop to these points. All right, you could see the market drop to this point, and then maybe you see the market move higher. All right, so the market could bounce and then move higher, forming that another N wave, which would then again try to take us to our level, right? So if we're looking to go to that level, we would look at this market going up to this point. This 1-to-1 would be at the top of the gray level here. That would be a 1-to-1 level, which would mean this leg right here is the same length as this leg right there. This would be your equal sign. So A, B equals C and D. All right, so then that's where we would be looking. But the market still can pull back to this level that I marked here. All right, so you could also see a pullback within that zone here, where the market would pull back to this level. All right, and then you would see the market. Whoops. Then you might see the move from here. This would still be another big N wave. As you could see, it's a crooked N wave. It got bent there, but it's still an N wave. And then you could see the market would then still shoot for our target. All right. Now, a lot of times, depending on how far the market pulls back, you might know what target you're going to reach, because you may only reach your NT target, or you may reach your N target, depending on what the pullback is on this market. All right. So we're looking at that. Now, I'm taking a trade here, quite possibly, on a close below this level, and I'm going to shoot for, I want to get through the cloud, to get to the cloud, because the cloud is going to offer support. And then I'm looking at this level here that I drew here off of this bounce of the high and the low here, which is bouncing off of the fractal high or fractal low, making a support level, and we bounce off of this level and then shoot for the upper side. Now, I'm going to give the market a chance to continue moving to the downside. If it can continue moving to the downside, we'll look for our target here. Now, when I start telling you more about fractals and how to trade them, you would understand more about the concept of Ichimoku, because it's all fractal based. Everything that you do in trade is pretty much fractal based, but people don't understand that, and a lot of traders don't even pay attention to fractals. Fractals are major for our trading, all right, but people just really don't even really look at fractals. But that's just a little bit of the Ichimoku wave analysis, time and price theory together. It really is much deeper than what I just explained there. Just some of the things that you could see. Just wanted to let you guys know Ichimoku is more than just the 5 lines that people talk about. You could trade the basic way of Ichimoku forever. You could still use those basic lines and the basic signals and entry levels, but you'll never understand the full concept and why a Kumo breakouts doesn't work for you sometime, or why TK crossover doesn't work, and so forth. You want to understand more than that. You want to understand the whole concept of Ichimoku, and to do that, it's going to take some time. So if you really want to learn more about Ichimoku, then come visit me at my site, fx@oneglance.com, and if you become a member, have a 1-year membership right now, $250 for 1 year. You could take all my courses. All my courses will explain everything that I've just talked about in detail, and also explain more about fractals, support and resistance, price action. We talk about a lot of things, guys, different ways to trade with Ichimoku, but you understand this major concept of trading Ichimoku with the 3 theories that most traders don't understand. All right, so hopefully this helped you out. Come visit me, fx@oneglance.com. And till then, guys, have a great one. God bless. So long.